Okay, the current economy and market is making things a little difficult for investors, but not impossible. Now, in this video, we'll discuss one of the best ways, in fact, what I believe to be the best way to invest in real estate, not only in this current market, but also in any market. Purchasing a buy and hold deal right now is hard. You can't just go on the MLS and pay asking price for a property and expect it to cash flow because you're often going up against individuals that aren't investors at all. And with these high prices, and more importantly, these high interest rates, to a traditional home buyer, that's not going to kill the deal for them because they don't need the deal to cash flow. They just need the deal to make sense, and in most cases, owning makes more sense than renting. As investors, we're trying to find a good deal. We want the property to cash flow. We want the property to appreciate. And so we have to work harder. In order to make things happen in a market like we have today, you have to be willing to put in a little bit of hard work. I feel that I can find and buy the best properties when I'm looking to BRRRR a property. Now, BRRRR stands for buy, rehab, rent, refinance, and repeat. In order to make a BRRRR work, you have to buy it for a solid price. The numbers need to really work. You also need to find opportunities to add value to the property, whether it's increasing the square footage or, for example, adding an additional bedroom or bathroom. And so you have to be laser focused on the potential of the property and definitely super tight on your numbers in your analysis. Of course, you're going to work harder on a BRRRR deal than a turnkey property. But while a BRRRR deal is harder, I believe it's safer because it forces you to invest the right way. It forces you to be more stringent and tighter on your numbers when running your analysis. One of the best ways to build wealth in real estate is to add value to the property with the goal of creating some instant equity. Now, pair this with the traditional buy and hold approach, and you have one of the best ways to grow your portfolio. And these two components are key to the infamous BRRRR strategy. So what is the BRRRR strategy? Well, BRRRR stands for buy, rehab, rent, refinance, and repeat. And so essentially what you're doing is you're looking to buy a property at a discount. And typically you're buying it at a discount because that property needs some work. And so you're gonna remodel and or rehab the property. Once that's complete, you then rent the property out. You then go to a bank and refinance the property, with the goal of pulling all or most of your money back out. Once that's done with, then what you're looking to do is to take that money and rinse and repeat this process. And so when looking at and evaluating properties, you want to ensure that your total all-in costs, so purchase plus rehab, will be at or less than a 70 to 75% loan to value. Because typically when you refinance a property, a bank will let you refinance it at around 70 to 75% of the loan to value. And again, this is because in a BRRRR deal, your goal is to be able to pull all or most of your money out in that refinance that you can rinse and repeat. The great thing about a BRRRR deal is that even if you can't pull all of your money out, you often can pull most of it out, which makes it far superior to a traditional 25% down deal. Now, nothing is without risk, and so in today's market, the changing interest rates are something to plan for. Make sure when you're running your analysis, you're also talking to and interviewing lenders because you want to understand your time frame to refinance. This timeline can vary anywhere between 6 months and even up to 1 year. What are some of the biggest risks in real estate right now? Well, right now, it's a combination of high prices combined with high interest rates. Look, I believe you can find a good deal in any market, so you should always be looking because you never know when a good deal is going to pop up. With that said, there are definitely some headwinds given the fact that in most markets, prices are still relatively high, and we also have high interest rates. Although the rates actually aren't high historically, for most people given recent history, they feel rather high. If you're looking to buy a property and not do any major renovations, then you should marry the property and date the rate. I mean, if the numbers work for you right now in the current market, then odds are at some point in the not too distant future, you'll be able to refinance the property and the property's numbers will work even better. But if they don't, it doesn't matter because the numbers still work for you today. But if you're looking to BRRRR, you need to make sure that your numbers are tight because of interest rates and the fact that you'll be looking to refinance in the short term. Keep in mind that the value of real estate is a moving target. It moves with the economy. And it might be less favorable for you when you get done with your renovations and look to refinance. The same basic concept holds true if you're looking to flip. All right, that's it for today, and we'll catch you next time.